Good morning. It's the Brew. Starting out Friday, the weekend, with our good friend Paulina Likos from CNBC. She's only got a short bit with us today, so let's get right to it. We're going to talk a little bit about the tech sector, so let's get busy. Good morning, ladies. Happy Friday. Hi, Paulina. How are you?
Good morning. Good morning. I'm doing great. How are you?
Oh, we're doing great. Hi, Ma. I haven't seen you in a while either.
Hey, guys. I know.
I've had a little time off, so I'm
hanging out in Monte Carlo. What can we say?
I'm kind of, I don't know, reverberating or something. I don't know what I'm doing. Paulina, good to see you as always. I know you have a little bit of a hard stop today, so we're going to get rolling right away. Tech sector. So on my vacation, the only thing I notice about the markets is they're down every day. So at least the NASDAQ for that matter, I should say. But boy, what's going on out there?
Yeah, so the equity markets have been struggling this week. As you said, the NASDAQ has been on a downtrend for the past few sessions. And I wanted to highlight a particular catalyst for that. And one of those catalysts are Apple. So Apple stock, it fell 3% yesterday, down about 5.5% over the last 5 trading days. And obviously, we know that Apple is one of the companies that has a huge part of the overall market. So any stark moves in that stock influences the performance of the overall market. So what kind of caused this move in Apple lower? Well, investors are selling off, and that's because there's a lot of investor angst coming from big news out of China. The Chinese government officials, they're banning the use of Apple's iPhones, and they ordered government agencies not to bring iPhones into the office or use them at work. So the market is reacting on this news because China is Apple's largest, one of the largest markets. It's the third largest market for Apple, and it represents about 20%, almost 20% of Apple's overall sales. So that ban on government employees could impact Apple's future revenues. And so this is coming at a critical time. We have the iPhone 15 launch coming out in mid-September. The iPhone is a huge driver for Apple. So that's another highly anticipated event. But that is one of the catalysts that has been pushing the NASDAQ lower this week.
Okay. Wow. So why is there the no love from the Chinese for Apple all of a sudden? They don't want to play in the sandbox anymore? Is it a little retaliation for the Chinese company that we sort of banned? I forget the name. It starts with an H. I can't remember the name off the top of my head.
Oh, Huawei.
Yes.
Yes, so obviously there's tensions between the US and China. That's nothing new. And this threat really isn't anything new either. Investors have long been concerned that China would be critical of Apple and its massive success in the country. China has been becoming more nationalistic, and they actually developed what looks like an iPhone knockoff, and so they're working on putting that out to market. But the reality is Apple is such a huge part of the Chinese economy, and many workers rely on Apple for production jobs. So it's going to be difficult to turn their head away from Apple.
Makes sense. Okay. Interesting. Anything else? I mean, I know Apple's a big part of the right. NASDAQ and these indices that have just been getting hammered. Any other kind of catalyst causing this? They can't on their own make that NASDAQ, decline 1% a day, right?
Sure, fair enough. I mean, there's also been some weakness in NVIDIA stock. And as we've been talking about these past few weeks, these big tech stocks have such a huge influence in the overall market. So any move is going to impact the NASDAQ major indices. So NVIDIA Obviously, the stock has seen a meteoric rise, but it's down 6% over the last 5 trading sessions. That could be a result for the tensions in China as well. Commerce Secretary Gina Raimundo, she visited Beijing and Shanghai last week, talking about how U.S. companies can better operate in China. The U.S. doesn't want China to have access to the best AI chips, and we know that NVIDIA has the best state-of-the-art semiconductor chips. So maybe that's the case there. Maybe it's also some profit taking because NVIDIA stock is up more than 200% year to date. So it could be a mix of things.
Okay. Yeah, I was going to say, geez, just the other day we were talking about NVIDIA and the wonderful blowout earnings, and now we're, heck with that now. We're on to something else.
I'll also note that, overall, we're in the month of September. September tends to be a weaker month for stocks because market activity tends to be a bit lower as people are coming back from vacation and summer ending and so forth. So it could be a mix of these, individual stock moves, but also more broadly that September is not the best month of the year for stocks.
Okay, that makes sense. I remember that from my trading days. One other thing, this is a side note, I guess. We at Tradier had a really good August month volume-wise, right? Which is in my, my history of being a trader on the floors. August is, as you said, the vacation month. Kids are getting ready to go back to school. The parents are busy with that whole activity. And it's typically a real slow time of the year. However, option volume and, stock volume has been pretty good. I wonder what's ringing there. Any ideas there? I don't have one. I got to be honest. That's usually the time I catch up on reading in August.
On the options front, I'm not really sure what would be the catalyst for that.
Yeah,
but
it's been pretty good. You have your spotty days, right? I think yesterday was a little bit under budget, but I'm kind of mystified by it because August is just historically a really slow month, but it's been very good. So anyhow, are there any pockets of strength in the NASDAQ or in the technology sector? And I'm always going to bring up, when you talk about technology, we always think interest rates. Interest rates really hurt, higher interest rates, I should say, really hurt those tech companies, right? So is this a harbinger of maybe higher interest rates again, another raise, or is, in addition to my original question, which is, are there any pockets of strength that you're seeing within that sector?
Well, the bright spots are actually coming within a different sector, and that's the energy sector. We've been seeing energy stocks doing pretty well during this bout of volatility. We have rising oil prices that have really been boosting the energy stock rally. And this, of course, is coming after Saudi Arabia recently announced it's going to continue its production cutback of 1 million barrels a day until December of 2023, until the end of this year. Russia also cut its export reduction of 300,000 barrels a day. So this appears to be some sort of coordinated effort to increase oil prices. And it's working because energy has been an outperforming sector as of late. WTI crude, which is the benchmark of oil, has been up this week. And I think this is really important to point out because Saudi is the world's largest crude exporter, and it heavily impacts oil prices, whatever their actions are. And more importantly, for consumers, this impacts them at the pump when they're getting gas. So oil markets have been, tightening. That's been the theme throughout this year. Demand continues to climb to record levels. Inventories are dropping. So it wouldn't be surprising if we continue to see, as this dynamic continues, the energy sector forge higher towards the end of the year.
Okay. I'm guessing that our closing 13 million acres of drilling property or land in Alaska, which I just read about recently, isn't helping the matter either, I'm assuming. But anyway, that's beside the point. Molly, anything from Paulina? You've been so quiet today.
Yeah, I know. I just love hearing you guys talk. I never want to get in the middle of the good stuff, but I do have a question. So, the CAPE ratio is a longer price per earnings view on the S&P, and it's indicative of whether the indices are overvalued. And it removes kind of inflation, looks at the long 10-year span. And so we've only had a handful of times where it's been hovering above 30, and now is one of those times. And I think when everything hit in 2020, it was up to 50. And so that is indicative usually of a rebalancing. So do you see that maybe it's just a natural leveling out of the NASDAQ and S&P?
That's a good question. I think that investors are always trying to gauge whether equities are overvalued, undervalued, especially in the tech sector where it's seen so much growth in a short period of time. People are wondering, am I paying too much for the stock? And I think it's important to look at how the stock is valued now versus its historical valuation and see how that lines up. From the analyst reports that I'm looking at for the tech sector, they do see growth in the quarters to come, in the short term, in the years to come. Obviously, a huge catalyst that could increase growth for these tech companies is going to be artificial intelligence. I know we've been talking about this for throughout the year, but it has been a true catalyst for the sector and residual sectors that kind of work within the space as well. So as that being a catalyst, and given that some of the valuations of the tech stocks between now and their historical average aren't that drastic, there's an argument that, at least in the tech sector, it might not be as overvalued as people think.
Okay, great. And then just final question. I hope you don't mind, Lex. I'm just going to put on my tinfoil hat in these last couple of minutes realizing that when, let's say there's a market correction, nothing goes away. It's a transfer of wealth. So as a trader, if I were, cold, I would say I'm really waiting for the correction, because that's when sales, it's like a discount store, and you can pick stocks up pretty inexpensively. So do you ever feel like some of the media is have a little bit of a scare factor to drive prices down? And again, I'm in my tinfoil hat, and it's many people are wondering it, so I'm asking for the world.
That's an interesting point of view. I think that, at least from the reporting from my perspective, reporting what is actually happening is the best way to approach things, and really trying to analyze what the news means. Sometimes the news can be difficult to hear. It can be challenging to understand, but
absolutely,
the economy is based on the behaviors of different people, different countries. So it could be, a lot to kind of take in. But I do want to add that, kind of on a positive note, that we actually had Goldman Sachs come out last week and say that they are cutting their odds of a recession to 15%. Previously, it was 20%.
Oh.
And so that's a pretty positive note. And with that, it's possible that the Federal Reserve, the U.S. Central Bank, could skip an interest rate hike later this month. So investors may interpret that as good news for the market.
That's great.
But yeah, so. So yes, there's always some good and bad news. It really depends on whether you're a trader or an investor, how you take that information and use it to your benefit.
Great.
That's a great answer, Paulina. Thanks.
Yeah, that's great, Paulina. I know you have to run. So great to see you as always. I love our Fridays together for more reasons than one. I love talking with you, and the weekends right after you have to depart. That's always good.
Like Pavlov.
Right?
It's Pavlov. We love seeing you, Paulina.
All right,
I wish
Paulina.
I could stay longer, but I'll definitely see you next week.
All right, Paul. Have a great weekend.
Bye,
See you
Paulina.
soon. Bye now. Molly, I forgot to tell you.
Yeah.
Your earrings look wonderful.
Do you love them?
Unbelievable.
Going for a
They look so
marshmallow
good.
look.
I love them. I love them. So we only have a
I gotta
couple more
fix that.
minutes today. You know, Fridays, I think, what do you think about Fridays? I like short Fridays.
Yeah, well, listen, you're the boss, Lex. So
I don't know about
we're
that.
we're team Lex here.
Yeah. Well, remember my Apple trade?
Yes.
What did I have? I'll
Perfect.
tell you about it if you didn't remember.
Right.
Okay.
You go ahead.
Well, I had long stock, right?
Yeah.
That's it. So just long stock, that only profits when it goes up, right? Simple. There's no
Yeah.
optionality to it whatsoever, just long stock. And remember that we were trying to protect that long stock with a collar, long a put, short a call. So if that stock goes down, the put kind of has some, ability to protect the downside. The short calls offsetting the long put for income. But France got in the way.
Oh, right.
France got in the way. My little trip to France, and I'm going to wear a scarf next time. My little scarf. My little trip to France got in the way. I didn't bring the computer. I didn't hedge it. I come home, and I've lost my pants on Apple. I swear. Look at these. These are shorts. I lost my pants. Since I've been gone by not being disciplined. It's unbelievable.
You're the best.
So
right.
Note to self and to folks.
That just made my weekends.
Note to self.
I gotta love it.
That discipline is important. I was not disciplined. Cost me some dough. Not horrible because I got a big gain in it, but I should have paid attention is the bottom line.
Right.
Because I would have protected myself.
Yeah,
I hate losing my pants. Do you see these things? Wait a minute.
They're like, there's some Maui sun. I feel like it's not Pilates day, it's surf day.
It's surf day. This is
amazing.
Crazy. I swear, and nothing matches. I've got these crazy bottoms with this crazy top. It's unreal. But the kernel of truth here, besides being so silly, is that I am always going to stress discipline with folks. And we're going to do in the weeks ahead. I want to do a beginning options seminar. Okay, maybe we spend half the time with the beginning options education, and then the other half of time talking about the markets and what have you. But we've been getting some requests to talk a little bit about, just starting with the basics and building our book, let's call it. So our book meaning the educational part of options, because look, we have, I think our community at Tradier is typically a little bit more advanced type of trading, but you know what? That's okay. We always have beginners. And sometimes beginners aren't getting some of the concepts we talk about that might be a little bit more advanced. So I want to go take a big step back and go back to Options 101 for a series. And we won't talk about the 101 part the whole time. We'll do maybe half and half, let's say. What do you think about that?
For the existing Tradier users, I would also say that, if you're flying a plane like you were in France with Apple, it's good to have a co-pilot. So many, one spouse will work if you're married, and so it's always good to have that little basic with a co-pilot who if something you get in a bind, you can call someone and say, hey, do this, that, and that. It's a good hedge.
Yeah, that's what your software is supposed to do for you, right? When you turn it on, it's supposed to alert you to problems that you may potentially have, which I could have done. But again, the 7-hour time difference in France versus here, I'm at dinner time enjoying a cool crisp Chardonnay most of the time. And
I know. And Trade Cheetah was built for blondes. So it's really, it's a real co-pilot.
I love that. Awesome.
And then just to drill in your position. So can you talk about how, placing, you have a caller, so you have a call and a put and a stock.
Yeah.
And just to drill that in, it's, you have a home, and a call is collecting rent, and a put is like home insurance. So how does home insurance, your put, help you when eyes are off in that situation? How could it have helped you?
Tell you what I'm going to do. Ready for this?
Let's see it.
I know Reuven's rolling over right now. He goes, why didn't you share the screen before we started? That wouldn't be any fun now, would it? Because that would be too smooth. Okay, so this is Apple. think about this. This is an option chain, simple enough, right? Right in the middle. So option chain, all that means is that's the template that you use in TradeHawk or any software for that matter, where all the options are visible. And as a note, calls are typically on the left of the strike column and puts are typically on the right. Now, I've seen people do weird things and reverse those. I don't know why they do that. But since the industry started, it was typically like that. Now, there's kind of some cool ways you can move this strike thing over to the left and have them both next to each other. I get that. But just for, illustrative purposes, my calls are over here. Can you see my mouse, Mal?
Absolutely.
Okay. My puts are over here. So I'm long stock. What I need to think about is, do I want protection for the stock or not? Now, I've got a big profit in it, right? I'm at the point now after the loftiness, and Apple's had a pretty good run. I know it seems like Apple will never lose money and never go down, but that's, as we've learned from Paulina, not the case. So I want to protect this position, right? And I want to protect it where it is now. So the stock, I think, closed at, around 178-ish yesterday, let's just call it. So I need to pick apart in the curve of what percent down I want to protect this. Now, percent down is I'm going to look at puts. So if the stock is trading around 177.50, let's call it, $7 lower is a percent of 177.50. So whatever that percent is where I want to protect. And when I pick a put to buy, okay, and I'm just going to throw it in the option ticket here. I think I'm going to throw it in the option ticket. Hold on, I'm looking at the wrong thing. So now I've got this long put, and it's trading at $1.17. So I need to sell a call that's roughly about $1.17. So I have that position, that collar, for no money. It costs me no money, right? So if you look at the call side, the 185 call is about $1.04, $1.07. The 182.5 is 172-ish. I'd probably go here if I'm tightening up my range, because now I get a nice little credit for this spread. So if Apple kind of wafts around here, I'll lose a little bit in Apple going down a little bit, but I'm protected ultimately below 170, right? Because that put's going to protect me. Yeah. Above 182.5, I'm not protected. I'm preventing any further gain. Okay. So this is a position you'd put on when you say, okay, I think Apple's kind of settled in here. I don't see much more upside, in the near future. I'm going to put this collar on just to protect my gains. I'm going to go to France. I'm going to drink a bucket load of Provence, Rosé, and forget about it. So I could have done this, but of course I'm too dumb.
And if your stock climbs through the roof, so Apple in this case they're going to head over to India. India only has a market of 5% users of iPhone, so I don't anticipate they might dip a little bit, but Apple's going to be fine. And so and again, that's just an opinion. It's So if it skyrockets, you can actually back out of a contract and grab your capital gains. Do you want to talk about how you might?
Yeah, you can do that for sure. So if I do nothing to this position and Apple skyrockets, I was wrong. I'm like, oh, there's still more upside. Oops. So too bad for me. What happens is that the spread, negates your gains from the upside part of this. The spread negates the gains of the stock moving up. Okay. So there's a point at which it stops and you're just flatlining it. So what I would do there, if I still believe in the stock, because once it's above that short strike, and you can see this inventory here. Oh, I didn't put the stock.
By the way, I'm sorry. I love TradeHawk. This is like, a fighter jet. This is cool, an incredible program. I love it.
This is good stuff. So I get stopped out, meaning at 182.5 plus, my credit, I'm done. I'm out of the position. Now, what can I do? If I want to still own the stock, I can roll that short call. I don't let it expire in the money, which causes an assignment on the short side. I get short stock to offset my long stock and my position goes away, right? Now, if I don't want that to happen, I can buy in my short call in this month and roll it out to another month. And I can keep playing that game, earning some income if I'm doing these for credits, time and time again. It's a very good strategy for folks who have a long-term bias or love of a particular stock, especially when it's gotten a little lofty, which I thought Apple did. So this is the first time I've ever done this, and I did it weeks ago, and I forgot to do it when I went to France. It's the first time I've ever put anything on to protect the downside. I said, you know what? And, I'm not going to go into the reasons why I thought it was a little lofty, but it's time for me to kind of protect my gains and put them in some sort of protection. And now it's not guaranteed that I protect it because it can still waft between the strikes, right? So I'll lose a little bit down to 170 and I'll get stopped out up at 182.5, but I'm protected beneath 170 forever. Just nets out. I'm done. So I stopped myself out at 170 essentially. Remember, it's the Mark Cuban collar. He did that with Yahoo stock when he
I
got
love
it
that
for
story.
broadcast.com, and he insisted that he collared that stock because he didn't want a lofty asset called Yahoo at the time, which he thought was lofty, to wipe away his net worth in Yahoo stock. So he did one of these. Now, interestingly, he had one probably done with like a Goldman Sachs who would write him a flex type option. So he kind of customized it. He didn't do it in the standard options space. He probably had it customized. But yeah, it's an unbelievable strategy. It's called a collar. Well, at least we called him a collar. I think I've heard risk reversal, which I think is the opposite. But I call him a collar, and I like to do them for no money and potentially credits. And it all depends on what I think my protection zone is, right? How much percent I want to protect to the downside. I hope that all makes sense.
Yeah, and so rolling can be a bit expensive. So if you continue to roll, you can start to eat into your income. So do you often back out of contracts and capture capital gains, or capture gains, or do you do not do that often?
I don't think about that. I don't think about the tax side of it. I don't think. That's a good financial planner kind of move.
Sorry, not your cap gains, just more. Sorry, I'm in accounting mode. So just your gains in general. So let's say it skyrockets and your call is capped at a certain price, and you want to capture that gain. Do you ever back out and buy that call back so that you can?
Well, I mean, the only way I'm going to capture that gain is if I sell the stock out, right? So if I close that position and liquidate it. So if I wanted to take some gains because I can, I would let it expire. Maybe I don't let it expire to its totality. I take some part of the position off, which means now if I think I have 9,000 shares, let's say, just roughly. So I'd have to have 90 contracts on, right, to have that hedged fully. If I only wanted to protect half of it, what would I do? I'd use 45 options. Half of 90 is 45, right? So I'd put 45 on so that if it goes above that short call strike, I'm going to get assigned on 4,500 shares of my 9,000. When that happens, I can realize that capital gain on half of it, right? And then I still have protection on the other half, and I could create another spread, based on my needs and my thought process on what Apple's doing. So I hope that makes sense.
Got it. Yeah, That's great. So we're going to do an education, and you're going to walk us through the basics and then climb us up to the complicated stuff.
Yeah, and we'll only do that for half. We'll do a little beginner in the maybe the first half of the show, and we'll talk about some of the market dynamics in the second half. You call it, Mal, whatever you're feeling like.
Okay, great.
Or we could reverse it and do it in the back end.
Okay.
But I want to get I want to start with what is a call, what is a put, strike price. We'll talk about synthetics along the way. We're going to talk about some of the Greeks again. And it's going to be very beginner. However, we want to make it, I want it to appeal to the very beginning user, because options, when you think about it, when you look at all this stuff on the screen, like, oh my God, it's like going to a Macy's Thanksgiving sale in the stores, things everywhere.
Right.
So, what do you look at? What's your first thing you do? And when I was in Monte Carlo, I was pretending I was James Bond. And I was talking a little bit about the casino and about roulette and about craps and all that stuff. And we're not going to get into that now, but quickly, there's an edge. Okay. Everyone has to have an edge. As a retail trader, your edge doesn't exist in the bid offer. Okay. It's a negative edge. So I always going to preach that, because that's the market maker's edge, right? Just like at a casino, their edge is statistics and, large numbers and many, many rotations, and they have edge in every time those dice roll, right? So they want to just let that happen over and over again. So that's how you got to figure out your edge as a retail trader. And I had a great conversation yesterday with a gentleman who has an edge in retail. And he has an edge because he feels he can read the tea leaves on charts and have a very high statistical probability of which direction the stock's going. Okay. So let me ask you, and we're going to leave and get ready for Margarita Friday.
Margin Margarita Friday.
That's right. Well, not for me. It'll be full of tequila. But but he says he's 90% effective picking direction. Now that's hard to believe, quite frankly, but whatever. His account's doing pretty well. Imagine if you knew the direction of a stock, right? Would you use options to kind of capture that direction, especially with a 10% downside? I mean, you don't have to really know much about options other than how they profit, whether the stock goes down or whether the stock goes up, right? If you have that direction figured out first, all of a sudden option trading becomes a powerful tool, and all of a sudden you've got a different kind of edge now, right? You can take advantage of time decay. You can take advantage of total direction. I said, "Gal, well, I'm not good at direction. I don't know which way things are going. It's just typically for me what I believe in, right?" But he had more of a very scientific way of looking at direction with the tea leaves. And again, he has all these indicators and stuff I didn't understand. I'm like, wow, that's like another F-16 fighter pilot cockpit thingamajiggy.
Right. I mean, if you are a directional trader and you don't have, let's say you're a new retail trader and you don't have funds, you can borrow stock and leverage, the power of options without having to buy the stock. Paulina was saying that the CAPE ratio is saying things are expensive. So let's say you can't afford it, and that's a way for that. Options is a really great thing for a new retail trader.
Yeah.
So I'm wondering.
Sorry. Go ahead, Mo.
Yeah, I'm wondering if you could just send us all his address so we can figure out what his play is and just go hang out on his lawn.
Yeah, I know where he lives. That's
okay.
That's important. No, that's a good point. We'll talk about that. We got to go, but we'll talk about that maybe next time. When I say options, you can use great leverage. I don't think of leverage as like spending stuff you don't have. Okay, like margin and margin. It's not the same. Good point. It's leverage that your dollar can do more things with options than it can with stock. You got to margin stock with the full, the full burrito of money, right? With options, you can capture the same movements of the stock for a far fraction of the price, and that's why they're so powerful. But
that's a great
understand them, must become educated on them, and must be disciplined. I can't stress it enough. I'm always going to say that discipline.
Yeah, and trading virtually is a great way to learn without having to.
That's true.
But
only for a little while. I only want people to do that for a little while. I want you to jump in the pool, Molly. No life vest on. Get in there and swim. You start drowning, you'll make it to the other side. Don't worry.
All right, Lex. I think we're all happy that you're back because. By the way, you were sending videos, and go check out Instagram and to see Lex's trip, but it was torture. We all wanted to be back there so badly. So we're glad you're back though.
Thank you. It was awesome, by the way. I had a blast. I really love. We're going to talk about Monaco and Monte Carlo and the little casino edge and all that stuff on another show. But it was great. Good to be back. Good to see you again. All right, we got to go. It's getting late. Good to see you. Have a great Friday.
All right.
See you next week on the Brew. Oh, new times too, real quick. So we're going to be, I don't think it's next week. I think it's a week after. We're going to be moving to 9 o'clock Central, okay, which is a half hour into the opening, right? So we're half hour into the opening. We're going to start at 9 o'clock Central going forward for about a half hour, Monday through Thursday. And then Friday with Paulina is a little bit early because she's got to cut it about 8:30 Central. Good?
Sounds good. That sounds great.
Good to see you. That's it. Bing, bing, bing.
Bye, Lex.
Bye.